In this video, we're going to start to look at sources where you can get inspiration for your next EA. And there are 6 key sources we've identified. And remember, it's all about idea generation to start with. Once you have a list of potential ideas, then you can start to trim them down, do some analysis on each to see which may be worth some more exploration. And these 6 key sources, which we'll go into one by one, are market observation, existing strategies, networking and education, technical analysis, behavioral experiences, and market psychology. And as we go through each, we're not only going to describe in more detail what these sources are, but also potentially give you examples along the way. As you're going through this process, what's really critical is you write them down. It may be that you ring fence time to think about this, or it may be that they just pop into your head. What's really critical is that you don't lose these. When they come into your mind, make sure that you have somewhere to record them so that you can come back and have another look later. So let's start our exploration with the first of these in market observation. The first and most obvious point is to look at price action. So we can look to identify recurring price movements or trends in instruments from citing charts that could be capitalized on. So a couple of examples might be a close the gap trade, move over previous day high. And although not an initial entry approach per se, this may include also price action for accumulating into an existing position, which is not an uncommon thing to see in some EAs. The second of these is trading experiences, often the price movements that you see repeatedly over time, that eventually these click as a potentially recurring concept. So, in other words, I've noticed this often happens on open, maybe an example. Market imbalances. Look for pricing discrepancies between related instruments, often in the same asset class, for arbitrage opportunities before the wider market responds. So, one classic example of this is to look at pairs trading. If they are normally reasonably well correlated, so for example, WTI and Brent oil contracts, there may be occasions when one surges and the other one stays put, or one drops and the other one stays around about the usual level. It's those situations which may create opportunities. And then there is institutional actions. At specific times, institutional behavior may provide opportunities, portfolios, or approaches are rebalanced. We may see sector rotation, and certainly it's something that's been referenced regularly in our daily updates, that we sometimes see a sector rotation perhaps from growth to value rotation. Or in terms of timing of institutional rebalancing, an example of this may be the end of quarter. Second source is existing strategies. Obviously, those of you who are discretionary trading will already be using and already have plans based on specific strategies. So we can use these as the basis of forming an EA, or take an existing strategy and tweak its rules, or apply it to a different asset, or use it in a different time frame. There may also be potential to combine component parts of strategies. So, for example, different exit approaches with a similar entry, or using a short time frame strategy, for example, 30 minutes, and translating it into a daily context. Or even, if this works on gold, would it work on silver? Less common, but perhaps worth a look at some stage, is what we would term counter strategies. So, this is building a strategy to exploit the weaknesses of a popular trading strategy. So, one of the things we often see in breakout trading is what's termed a false breakout. Perhaps we can identify times which this is more likely to occur and trade in the opposite direction. The third area relating to existing strategies is those ideas which pop up during EA development. It may be during initial analysis and testing of an EA that you may see other things that may be alternatives to use similar or even reverse price action. So recently we looked at a move over a previous high as a potential EA, but often we didn't see that. We saw, rather than a breakthrough in a previous high, we saw a bounce off a previous high. The third area is straight technical analysis, and obviously indicators as a source of potential ideas is not uncommon. One of the things we could use is things like pivots and support and resistance or fib levels. We can experiment with different combinations of technical indicators to generate entry and exit signals, although there is an approach of just lobbing a heap of indicators at an EA and seeing which sticks. This may not be necessarily an efficient approach. But an example, perhaps, of something else you could consider would be Bollinger Band strategy. Then, of course, there's chart patterns. Look at classical chart patterns like head and shoulders, double tops, bar or candle reversals. Although possibly difficult in some situations to program, they're not impossible. And things like 3-bar reversals, as an example, would be very practical in terms of developing an EA around. The fourth area is network and education. Trading groups, although often of mixed quality, do give you the opportunity to engage with other traders to bounce ideas off. Casual discussion, sharing experiences or challenges can lead to ideas that may be worth exploring further and provide, of course, opportunities for collaboration, which, of course, we're doing as part of our EA group. And then there's webinars and education events. Seeing others use or discuss strategies that they may use may have the potential to explore and test to see if developing a related EA around what you've learned is possible, even if that strategy, when it was presented, was discretionary in nature. Number 5 is your own behavioral experiences. So strategies can be designed around personal experiences that are difficult challenges to overcome. An example of this would be with cognitive biases that cause traders to act irrationally or emotionally during specific market conditions. So an example of this may be a tendency to procrastinate on trade entry. That could be overcome with an EA. Of course, one of the key aspects of EAs is they do take that entry-exit decision-making away from the emotional and more into the objectives. That's not to say that there isn't a place and a role for emotion in EA development. It rather sits in a different place, which we'll talk about in another unit later. Then, of course, there is trader access. There may be a desire to take advantages of opportunity missed to other life events, including, of course, the need to sleep from time to time. Also, it may be that your work doesn't allow you to access markets or general lifestyle. One of the things that's commonly seen is there are often significant moves in the US session. And if you're based in Australia, particularly on the East Coast, these may be difficult to take advantage of. An EA obviously can solve that. And number 6 is market psychology. Again, a somewhat less common source of EA development, but nevertheless possibly worth considering. We know that subsequent to significant data or economic news generally, markets may overreact or underreact. And then after that initial knee jerk, we get a subsequent response where there's a return to what is a more stable state. So, for example, subsequent to a CPI data release, we may get wide top to bottom bars of significant length, and then subsequently we'll get a pullback or a continuation from that, depending possibly on the structure of that candle, particularly if there's been an overreaction. Maybe the same with stocks and a response to earnings report. Again, often there is an overreaction, or the market initially appears to be underwhelmed with what's going on. Again, opportunities may exist there. The final source is one of momentum. We know that many people, theoretically at least, even if behaviorally questionable in terms of execution, human behavior likes chasing winners. And this can create momentum. That bandwagoning effect of seeing a stock breaking through a key level can excite many traders across many timeframes, which potentially can be exploited. So just to give an example about how that might work, we could see the momentum growing, and once we have evidence that that is the case, get in and then get out before the peak of that momentum. Because after all, of course, what we see on charts is purely a reflection of market psychology. So there you go. You have 6 potential sources there where you can generate ideas from. So really now it comes down to you. Commit to taking action to generate potential EA ideas. Unless you commit to doing it, obviously it's not going to happen. And of course, we need a system for doing that. So what I'm suggesting is you choose 2 of the 6 sources and create 3 potential ideas in total. If you're part of this group that's doing this course, then obviously we can submit them to the group channel. And then as a group, what we will do is we'll have a look at these and as a group decide which are the ones we're going to focus our attentions on. Hope that's been useful and time to get busy. See you later.